Okay, so this is the question where you are finding problem, right? So let's read the question at first. On 1 October 2013, Natasha Salim has started business of altering and mending clothes. On that date, she purchased a machine, $4,000, and paid by check. Okay, bank payment has been made. Next, on 1 January 2014, she purchased another machinery, $6,000 on credit from ABC machine. Okay, so this was by check, and this purchase has been made on credit. Okay, so she decides to depreciate the machinery. Let me highlight the important points. Okay, this is the date, this is the purchase, this is the date, this is the amount of purchase on credit. Okay, next she decides to reduce charge depreciation by diminishing balance method. At what percent? At 20% per annum. Whole year's depreciation is to be charged in the year of purchase. Okay, mind you, this line is very important. Okay, whole year's depreciation was to be charged in the year of purchase, but no depreciation is to be charged in the year of sale. So if you purchase an asset on the purchase year, for the accounting period, full year depreciation will be charged, and in the year of sale, no depreciation has to be charged. So on 1 February 2015, she has sold the machinery that has been purchased on 1 October 2013. That means this particular machine that has been purchased for $4,000 has been disposed. Okay, and she sold it for cash for how much? $2,100. So on this date, for this amount, prepare the following ledger accounts in the ledger of Natasha Salim for the year ended 2 years, 30 September 2014 and 30 September 2015. Balance the account and also bring down the balance on 1 October 2014 and 1 October 2015. That means you have to prepare account for 2 years. Okay, so forget about this. First we are going to prepare machinery account, and we know that machinery account and provision account goes hand in hand, right? This is our machinery account and this is our provision for depreciation account. Let me use another page, it will be good. Okay, so this is our provision for depreciation account. Okay, so on 1 October 2013, she has started a business and she had purchased a machine for $4,000 and paid by check. So it is 1 October, which year? 2013. Since the payment has been made by check, so we write down bank. What is the amount? $4,000. Done. Okay, next we move on to next purchase, 1 October. So October, November, December, and then January. That means this will come first. We don't need to close the books of accounts, but this is going to affect. So again, on 2014, same accounting period, this is on 1 January, another machine has been purchased, but this time it is on credit. So we write the name of the supplier, ABC machines. Okay, had it been cash, we'd have written cash here. So this is $6,000. Okay, is there anything that is happening within this accounting period, like from 1 October till 30th September, right? We close the books of accounts on 30th of September. So till 30th September 2014, is there any sale? No, it is on 1 February, so no problem. Now we are going to close the machinery account. Close the machinery account. 6 plus 4, this is our 10,000. Close the books for the year, 10,000. So on last date, that is 30th of September 2014, the balance of machinery that is going to be remaining with the proprietor, okay, in our hand is nothing but $10,000. Okay, and again this balance will be opening balance for the following year. That means on 1 October 2014, the balance of machinery that we are going to have in our hand, balance brought down, is how much? It is again $10,000. Till here I hope there is no problem. Okay, $10,000 it has been brought down. Now see, as soon as you prepare the machinery account, you also need to prepare the provision for depreciation account, right? So you know that on the year of purchase you need to charge depreciation for the what? Whole year. It says like that, right? A whole year's depreciation was to be charged in the year of purchase. So 4,000 whole year, 6,000 also for the entire year you have to charge. Go to provision for depreciation account. Here on 30 September 2014, yes, it was purchased on 1 October 2013, year ends on 30 September 2014. So here we are going to charge depreciation. Write down income statement. 5 minutes we are going to write income statement. So this is 4,000 plus 6,000, right? So 4,000 plus 6,000, our total machinery will be how much? 10,000. 10,000 ka 20% is going to be $2,000. But mind you, this 4,000, 20% of 4,000 is going to be $800, plus 20% of this $6,000 is going to be how much? It is going to be 1200. Two machineries. Okay, I have just split it for our convenience. 800 plus 1200, total will be $2,000. Okay, so is there anything that has been done during the year? Is there any sale within this year? No. So just do the totaling and balancing. Close the books. 2000, this side also 2000. Okay, so write down 2014 30th of September. So 2014 30th of September, that is same date. Here we are going to write balance CD after closing the books. What is the amount? It is $2,000. Again this same balance will be brought down here as a credit balance on 1 October 2014 as balance brought down. What is the amount? $2,000. Okay, this 2000 as a breakup. Okay, 800 and 1200, you don't need to be confused with this. Okay, now you see what happens next. She decided to charge depreciation on this much. Okay, no, on 1 February 2015, Natasha Salim decided to sell the machinery that was purchased. Right now you see, after 1 October 2014, the year when we are going to close the books of accounts, we are going to close it on 30th of September 2015, right? But before that, you see, on 1 February 2015, okay, in the month of February, she has decided that the machinery that was purchased on 1 October 2013, that is that 4000 wala machinery, was no longer required. So there is a sale, right? So we know when we sell a machinery, we prepare a new account. The name of the account is disposal account. Yes, let me use a new page. So this is our disposal account. Disposal account. Yes, now you see, when the machinery is no longer required, or we are going to dispose the machinery, the balance of machinery will decrease. So here we write down 2015. On what date? On February 1, we transfer the machinery to the disposal account. Okay, or simply you write down disposal account, disposal of machinery. Which amount? Only the 4000 amount. Remember, only the 4000 amount you are going to transfer to disposal. And what about other machinery? Other machinery is going to remain. Okay, please don't get confused. Now if you close the books of accounts in the month of what? September, you will have a balance in machinery of $6,000. At the same time, see, this is provision for depreciation. Here also, on 1 February, it comes on the debit side, right? 1 February 2015, September के पहले तो February ही आएगा. Here we write down what? Disposal account. Yes, so what is the amount that will go to the disposal account? Mind you, it's only $800, because $800 was the depreciation on first machinery. Only this portion will be transferred to disposal account. Okay, so disposal account is $800, and this side disposal account is how much? $4,000 that has been transferred. So you do the totaling. This is 10,000, this is 10,000. Close the books of accounts on which date? 2015 ka 30th of September. Yes, 2015 30th of September. This will be balance CD as 6,000. Again this same balance will come down on 1 October 2015 as balance brought down $6,000, because the company or the organization is going to have only $6,000 of machinery in hand after the disposal has been made. Done. So this is our entry in machinery account. Same entries will go to the provision account. Disposal account gone, 800. Now, is there any sale of the second machinery? This $6,000, has it been sold? No, right? This machine has not been sold. That means at the year end we are going to charge depreciation on this machinery. Once again we write down 2015. This is September, which date? 30, September 30. We are going to write here income statement. Okay, this time we are going to charge depreciation, but only on the machinery of value $6,000. Now you see, common mistake that students make here is that they just write down 20% of 6,000. They miss up the point that this is reducing by diminishing balance method. Yes, so we have to find out net book value. That means 6,000 minus what was the previous year depreciation. See, 1,200 on the second machinery. So this is our net book value. 6,000 minus 1,200. This is going to be how much? $4,800. इस चीज़ का 20% you have to find out. Okay, we have done it in statement form. This is shortcut that I am telling you. Okay, so this is 4,800 into 20%. 4,800 into 20% is going to be 480 plus 480, $960. Okay, since the machinery has not been sold, we are charging depreciation for the entire year. Now close the books of accounts. This is 2,960. Close the books of accounts. This is 2,960, and here on 2015 same date, September 30, there is a balance. Yes, this balance is nothing but 2,960 minus what? 800. It is going to be 2,140. 2,140. Yes, is it 2,140 plus 800? 2,940 है, sorry, 2,160, not 40. Okay, 2,160. So this is the balance in provision for depreciation account. Okay, now bring down the balance on 1 October. This is going to be 1 October 2015. Yes, the amount is here, balance. This is brought down, this is obviously carried down. This is $2,160. So this is your provision for depreciation account. Okay, and this particular balance that you are seeing here is only for second machinery, as the first machinery has already been sold. Okay, in the year of sale we are not supposed to give any depreciation as per the given question. Okay, so this is it. This was what was given in the question. However, I want to give you one more idea on disposal account. Yes, just transfer the amount on two dates. It was sold on 1 February 2015. Yes, 2015, 1 February. We know disposal account, how does it work, right? So machinery account credit side you wrote disposal, so disposal account debit side you're gonna write machinery. Yes, what is the amount of machinery? It is $4,000. Here you're going to write provision for depreciation account. This is how much? This is only $800. Okay, so did you receive any cash? Yes, we have received cash. 2015, 1 February. For what amount it was sold? It was sold for $2,100 in cash. So write down cash, $2,100 in cash. Now you do totaling and balancing. This is 4,000. This is how much? 4,000. माइनस करो 4,000 से 2,100 और 800, यानी कि 4,000 माइनस 2,900. 2,900 minus 4,000 is going to be 1,100. Yes, so it is 1,100. Here there is a balance 1,100. This is on same date, 2015, 1 February. Okay, this is 1,100. We transfer it on the last date. Okay, this is 30 September 2015. Here we write down what? Loss on disposal. Okay, this is loss on disposal, or simply you can write here income statement. It denotes loss on disposal. Okay, so this is our entire answer. 4,000 का मशीनरी, उस पर डिप्रिसिएशन लगा था $800 का, और उसको बेचा गया 2,100 में. सो 1,100 इज़ आवर लॉस ऑन डिस्पोजल. So this is it. This is what the question has been asking. Okay, and yeah, this was in your past paper. I don't know which year exactly, but it was there. So go through it. If you have any problem, let me know.